Hi guys, it is Pila here. Welcome to my YouTube channel. If you see this video for the first time, if you come across my YouTube channel for the first time, please do not forget to like and subscribe. So today we're going to talk about Australian dollar versus the US dollar. We'll be looking for opportunities based on on what the market is presenting to us or the market has presented to us. So looking at the chart on 6 months time frame, remember I said whatever we do in the market, we have to start from higher time frame and check what is happening. This is 6 months chart, guys. I said whatever we do, our job is to find the support and the resistant level. So this is our support, this is our resistant level. If that is our support and that is our resistant level, it means this is our support and that is our resistant level. So the $1 million question now is, where is the market coming from and where is the market headed? If you know support and resistance, you can see that this is our support, this is our resistance. The market is coming from the support. It is going where? It went up to the resistance. So now the market is coming from the resistance, and where is the market headed? Back to the support. So now, if you find yourself looking for opportunities, your opportunities must be based on a higher time frame. On a higher time frame, the information we get from higher time frame is that the market is going down. That's the information we get from higher time frame, of which is 6 months. 6 months shows that we are pushing the market down, guys. So whatever we do, let it be our job that we find opportunities that are pushing the market down. As much as the market is going down, you might find opportunities that are pushing the market up. You can only take those opportunities only if you know how to approach the market. Né? Let's move back to the candlesticks. Let's move back to the candlesticks. If we move back to the candlestick, those who have my ebook, they know that here we have a continuation pattern. They know that there we have a continuation pattern. And again, we had a trend line that was broken. It looks like this. It means the higher the chance that the market will continue to the downside on a higher time frame. You can go to smaller time frame, you'll find opportunities that are pushing the market up. But the overall trend is a downtrend. All right. This is the information you get from 6 months chart. Né? All right, let's add more information. If we add more information, we get a trend line. Again, let's remove this continuation pattern and this trend line as well so that our chart can be clean, so that our chart will be more visible. So here is your trend line. This is your first time, this is your second time, and then this is the third time. So the market went down and then the market came back again. Now that we have identified almost everything, let us move from 6 months to 3 months chart. On 3 months chart, the trend line is still visible and accurate. This is the trend line. Here is your first time touch. Here is your second time touch. We sell on the third touch. I assume that by now, guys, you understand what is happening in the market, right? Or how to approach the market. That's how I assume. Because I've been sharing this information for the longest time. So now, you notice that the market went down. We are on 3 months chart right now. On 3 months chart, what is it we get on 3 months? We get that the market went all the way down. The next thing, they came back to test this trend line that was broken here. So if our trend line was broken there, it means that the market will come back to test the trend line that was broken so that they can continue to the downside. This is 3 months chart, guys. By now, again, you also know that when we are on 3 months chart, it means each candlestick that you see represent 3 months. Each candlestick that you see here represent 3 months. No? All right. So what we're going to do here now, we will move from 3 months to monthly chart. Before we move to 3 months to monthly chart, you can also add a trend line that looks like this and leave it there. Why? This is your first time touch. Those who know how to use trend lines, they will understand. This is your second time touch of the trend line. Now, what are we waiting for? We are waiting for the market to come down to this trend line so that we can take another decision to push the market up. But we will use this information more on smaller time frame. We will leave it right here now. Let's move to monthly chart. Let's move to monthly chart. This is our monthly chart. Our monthly chart, it looks like this. This is our monthly chart. Everything is still visible. Everything is still visible. Let's erase and start again. Below, it's your trend line that needs to be tested. And then above, it is the trend line that comes from a 6-month chart. And then below is the trend line that was broken that just got tested right now. So on monthly chart, the market is going back to test the trend line. All right, let's move to weekly. If we move to weekly and then we use a line chart like this, the market was going up. This structure that you see here, it's a structure of an uptrend. Let's use a horizontal line. If we use a horizontal line moving to the left-hand side, here you had your support. You had your support. Your support was broken there. It became a resistance on the right-hand side. Can you see that? Now, if we go back to the candlesticks, you can see that they tested the same resistance. Let's use the line chart. Again, this is your resistance level. It was broken. As the resistance was broken, the market went up. You move to your left-hand side, we have a continuation pattern. I assume that by now, guys, you know how to trade a continuation pattern. And then the market came back down to test the broken resistance as support. The market went up, it came back down to break this support, and then the market went back up again to do what? To test the broken support as resistance. That's the current price, or that's the current information. Looking at this scenario, this is weekly chart. Let's erase again everything. Make sure that your chart is always clean, guys. I always say that. Let's go back to the candlesticks. Now, from weekly time frame, what do? We move to daily. Before we move to daily, what else do you see? Here you have a trend line. This trend line is about to be tested. Here's your first time touch. Here's your second time touch. Now, let's highlight this one as a zone. The zone looks like this from the left-hand side. You had your support, it was broken, your support became a resistance on the right-hand side, right? That's the main reason why the market is also changing the direction here. And again, this is not the only information that we have here that correspond that the market will change the direction here. Remember, from monthly, from 3 months going to weekly, we had a trend line that was broken there, of which is the reason also why the market turned here. So what we're going to do now, we will move from from weekly to daily. We will move from weekly to daily. So now, looking at this information, remember what I said to you. I said from a higher time frame, the market is going down, right? As I said that from higher time frame, the market is going down. Let's verify more information here. Let's add a trend line from here going up. Remember what I said about trend lines, guys. I said when your trend line is broken, they'll come back and test it. Use a line chart, you'll see. Your trend line was broken. They came back to test the broken trend line. Let's use the line chart again. Now, with this information that we have right now, the trend line was broken. They came back to test the trend line. Instead of going down, they went up a little bit. It's fine. So what we're going to do now, we'll take this trend line and place it there and come back like this. What is it we have? We have our first time touch of the support of the trend line there, our second time touch of the trend line there. So now, here below, we have our first time touch of the trend line, our second time touch of the trend line there. What do we do from now? we wait for the market to come back and test the trend line for the third time. Now, if I zoom in here, I have to adjust the trend line nicely. Hence, you can see the trend line was a bit penetrated. Nice. Now, for the rest of the day today, our job is to observe what is the market going to do and how long is the market going to go to the trend line. So we have to wait for the market to come back to the trend line so that we can take our entries corresponding with the direction of the market. Up there, we have a continuation pattern. The continuation pattern that you see up there, it will also match with the trend line. But then you'll find more information as you are going down the time frame. So what I'm going to do right now, I will remove this continuation pattern and move to 4-hour chart. And move to 4-hour chart. Remember, if you're out there, you trade trend lines. This is where I must find you. If you're out there trading trend lines, this is where I must find you. Not anywhere here. If you are trading trend line continuation pattern, this is where I must find you. If you are trading support and resistance, this is where I must find you. If you are not trading any of these patterns, then that means you don't have any entry here. Okay, sharp. Now, let's move again from daily to 4-hour chart. Take your time. Don't rush to buy, don't rush to sell. Right now, the market gave us few signals that, hey, the market will continue pushing up, but then the market went down instead. I'll show you why. Let me adjust the trend line above. The trend line is now accurate. Now, remember, I said to you, our job is to observe what is presented by the chart to us. So if you look closer here, you got your break of structure. This is the broken what? It was a resistance before coming from the left-hand side. It was our resistance. It was broken. It became the support. It became the support. It became the support. It was broken on the right-hand side. Now, what is happening? The market is approaching this what? This trend line. After testing this trend line, I'm expecting the market to continue to the upside. We have a break of structure there. We have two options. The market might come. We have to observe the current trend. We have to observe the current trend as the market is going up. Whatever that they will leave here as they are pushing up is what we're going to use to our advantage. That is what we are going to use to our advantage. For now, I know most of you, you'd be looking for opportunities. You'd be like, oh, flip. We know that the market is going down. Since well, we know that the market is going down, why can't we just sell? Knowing very well that the market is going down. It's not safe to sell here. Because if you sell there, where are you going to place your stop loss? Where are you going to place your stop loss? Of which your trade is not going to make sense. So the best thing that you can do, if you are out there, you trade trend lines. Wait for the market to come back to test your trend line so that you can step in and buy easily with smaller risk or with low risk. Now, our job is to do what again? Is to move to our left-hand side to check almost everything. To check what is it that we have. Sorry. That correspond with what we got from higher time frame. Remember, on higher time frame, the market is going down. It's a downtrend. But here, the market shows that it will give us a pullback. Remember, the market is not moving on a straight line. Therefore, the market will give us a pullback here. So how can we get in from the pullback and move with the direction of the market once it reaches the broken support and test it as a resistance so that we can continue with the actual trend of the with the actual direction of the market. So let's move to 3-hour chart. We need to check what else do we have here that correspond that the market will change the direction. Therefore, we will move to 3-hour chart. This is my 3-hour chart. Since well, this is my 3-hour chart, my job is to come back to this left-hand side and check what is it that I have that can cause the market to change the direction. Let's use a line chart. It's either we place this one here as a resistance that was broken, Let's go back to the candlesticks. Okay, it shows that it was tested. Therefore, let's move to 2 hours. On 2 hour chart, here you had your resistance. This is your 2 hour chart. You had your resistance here on your left hand side. It was broken. Let me remove this one. Let me remove this one. Guys, feel free to leave comments for me and let me know if you have challenges. Maybe I can find a solution for your problems. Let's find this one. Let me extend this one to the right hand side. Let me extend this one to the right hand side because we can't see the right hand side right now. So let me extend this one to the right hand side. Why am I extending? It's because of here I can see we had a resistance that was broken, and after the resistance was broken, they came back to test the broken resistance as support. This is our fresh support day. So if that is our fresh support, that means when the market comes back to the trend line, it's supposed to match with this. So we're supposed to get a support that was broken. Let me add here support, a support that was broken. And then the support that was broken will be matching with what? The support that was broken will be matching with, let's continue here. Support that was broken will be, the support that was broken will be matching with our trend line. It means traders who are trading support and resistance will step in and do what? And buy. It means traders who are trading support and resistance will also do what? Will step in and buy. So that means we have a higher chance that the market will change the direction once it reaches the support. Let's just remove this one for now. Let's check the current price. Can you see where I said the support will be matching with the trend line? Here. Here we have a higher buying zone. Why? We have traders who are trading what? Trend lines. We have traders who are trading what? Support and resistance. Both of them, they will be looking for what? They will be looking for buy opportunities. How many traders do we have that are trading support and resistance? International, we don't know, but a lot. How many traders who are trading support and resistance? A lot. So both of them will be here looking for what? Looking for buy opportunities. That means the higher the chance that the market will change the direction and move to the upside. That's how simple it is to analyze the market. Do not rush to buy immediately. Do not rush to sell immediately. Your job is to wait and observe what is the market doing right now. Where is the market headed? Because if you will rush to buy or rush to sell, you will find yourself taking losses that you're not supposed to take. Now that you are done analyzing, it means you have to wait for the market to come back and test I'm sorry, now that you are done analyzing and now you got the direction of the market, your job is to find your take profit now. Isn't it that you have identified your entry point? Now that you have identified your entry point, you have to find your exit point. Remember, you don't just go to the market and decide that you want to buy right now and then you want to exit. You prepare for everything. Now it is time for us to find our exit point. I repeat this one, guys. If you enjoy my content, do not forget to like and subscribe. Do not forget to like and subscribe. I know that lately I was not posting now and then, but I assume everything is done now. I'll continue to post now and then in the market, guys. Do not forget to like and subscribe as well. So now our job is to find our exit. Now, listen to this carefully. The advantage that we have in the market with these patterns that I use, let's look at this. Your entry point is supposed to be looking like this. This is your entry. I'm on 2-hour chart right now. This is your stop loss, and then your exit will be on that break of structure. Your trade is balancing. Looking at the stop loss, looking at the profit. Now, how do you determine that this is where you're supposed to exit my trade? You look at the current trend, right? This is the current trend as the market was going down. What is it we have here that can cause the market to change the direction? You realize that there's nothing here that I see that can change the direction of the market other than the break of structure. Therefore, that's your take profit. If the market continues moving to the upside, don't cry, don't worry. Wait for the market to go straight to the trend line. Once the market reaches the trend line, the higher the chance that the market will continue to the downside because of the overall trend of the market's a downtrend. Can you guys see that? Don't rush to jump in just because of you assume that the market is going to sell. The reason why I'm saying so, it is because of, in most cases, people jump in early assuming that the market is going down. People assuming that the market is going up. Now, let's say for an example, you are down here, you made your money here, you are okay with it. Don't rush to sell here. Wait and observe what is the market doing. Again, we do have chances that the market can go up and break the trend line. That's also fine. The market will go back and test the trend line. That's your entry point. You move with the market to the downside. But again, this one is for those who are trading supported. I'm sorry, this one is for those who are trading trend lines only. They're gonna get their entry when the market comes back to test the trend line. This one is for those who are trading support and resistance. So what you can do here, if you are not trading support and resistance, move to the upside, or in case the market goes up, we need to make that trend line up there correspond with the third touch. What else do we get from the third touch again on that trend line that is pushing down? Here, if this is 2-hour chart now, if you move to your left-hand side, this is my left-hand side using this current trend as the market is going down. If the market changes the direction and go up, remember what I said when it comes to support and resistance. I said when you trade support and resistance, you need to pay attention to the touches. So here we realize that we have 2 touches on this resistance. That means the higher the chance that we will break this one and go up. Now, if we go up here, let's assume that this trend line is invisible. We don't see this trend line at all. No? Erase it with your mindset, even though that you can see it, but try to erase it. Looking at this trend now, where do you think the market will change the direction? Here, why? We had a resistance here that was broken. Let me highlight the resistance that I am talking about. Guys, it is very much important for you to understand support and resistance. If you come across this video for the first time, please go back to my videos and check how I trade support and resistance. You can just scroll around my YouTube channel. You'll find more information about support and resistance. So here, this is how you trade your support and resistance. Yeah. So here is your support. I always say when you trade support and resistance, it is your job to pay attention to the touches. So after realizing that we have 2 touches on the resistance was broken. Hence, I always say when we trade support and resistance, our job is to pay attention to the touches. We realize that the market came back to test what? To test the broken resistance as a support, and then the market went up. As the market was going up, a trend line happened. Can you see that? There was a trend line that was pushing the current trend down. I know most of you don't believe in trend lines, but there's no problem. There's no problem. But if you want to become profitable, you will use the same trend line here that I used. It's for those who want to become profitable, this one. If you don't want to become profitable, it's fine. You can keep bad-mouthing trend lines. What else? We are working with trend lines here. No? Sharp. All right. Let's forget about that. That was not part of what I wanted to talk about. Let's continue. Now, looking at this scenario, you had your resistance here with 2 touches. 2 touches. And then you had your support here. it was broken. After the support was broken, it was never tested. Can you see that? The support was broken, it was never tested. If that support was broken and it was never tested, that means they higher the chance that when they come back to that support, they will test it as a resistance. Now, looking at what we have here, sorry, looking at what we have here, the market comes to the trend line, we get our entries, the market goes up, it comes down, it goes to the break of structure, it comes to the continuation pattern, it goes up again, it comes back to test the resistance, and then the next thing, it goes to what we have here, of which is this a broken a resistance, and then after this resistance, the market will just shoot up. What do we have there? We have a trend line that was broken. Sorry, not a broken trend line. We had a support that was broken and a trend line as well. It means traders who are trading trend lines will be looking for what? Will be looking for sell. It means traders who are trading support and resistance will be looking for what? Will be looking for sell. That means the higher the chance that the market will continue to the downside. That means the higher the chance that the market will continue to the downside. It is our job, guys, to pay attention to what was presented to us in our chart. We don't have to assume that the market will go up or the market will go down. Use what was presented to you. Look at the chart, you will get almost everything. Avoid to jump in on a moving trend because of you'll find yourself taking so much losses that you're not supposed to be taking. It's fine. Let's erase almost everything and move to 1 hour chart to see what else do we get when we move to 1 hour chart. Remember again, the direction we got from 6 months chart was that the market is going down. Always remember that. Don't just rely on the information you get on smaller time frames. So looking at what we have here again, this support is more visible and this support is matching with the trend line. And if you go to daily chart, this trend line, it is visible. It is very much visible. So imagine if you take your entry up there and then continue with the direction of the market. It means you will find yourself taking a profitable trade. Always remember, take your time when you analyze. Don't rush to sell, don't rush to buy. I'm on 1 hour chart. If I were to show you how many opportunities were you gonna get when you're trading support and resistance here, you'll be worried. You will be worried because of some of you know how to trade support and resistance, but you're not trading it. Some of you know how to trade a continuation patterns, but you're out there not trading them. But when you are on your own, you always say, I want to be profitable. Next month, I'm going to be profitable. That month, I'm going to be profitable. Here is your chart. You can't read the chart. Give yourself time. If you start learning today, by the end of this year, you'll know how to trade. And if you're that smart, in 2 months, you'll know how to take your entries on your own. And I'll say this again. We have so many people that will tell you that I know how to analyze the market. The problem that I have is that I don't know where to take my entries. Your entries will be determined by what? By the strategy that you are using in the market, by the pattern that you are using in the market. This is what I am always preaching. In the market, I can't find entry points. Your entry will be determined by the pattern you are using. If you are trading head and shoulder, it means your entry it's on the neckline. All right? Your entry will be where? On the neckline. This is where you get your entry now. All right? You are trading head and shoulder, right? This is your entry point. Ama rules so allow, ama rules were head and shoulder. You are out there, you trade trend lines, the market goes from the first time, give us the second time, the market goes up, you wait for the third touch. That's your trading rule. You buy on the third touch. And then why do we still have people who are still struggling on my entry points, where else I keep on sharing the same information over and over and over? Shoot and inglaleli, but no problem, it's fine. When I say to you, when you open your chart, everything will be presented to you. And everything is a build up, guys. Let me break it down for you. I'll erase almost everything. We are done with Australian dollar versus the US dollar. It's so easy to approach the market if you do, or if you approach the market this way. Look at this. You're out there, you trade support and resistance. Then I'll do a few things for you. You leave this one like this, right? The first time touch, I know you always say, it's easy to draw this information because of it happened. That's a foolish thing. You come again. That's your second time touch, right? You notice, okay, oh, the market came back to the trend line. So currently, I have nothing on my right-hand side. You observe again. You have your first time there. The market went up. After giving you the second time, the market pushed all the way down. You got your first time touch. You wait. You got your second time touch. The market went up. They tried to push the market up, but they failed. They pushed the market back to the trend line. What do? You got your entry pushing the market way up. As now the market is going up, where is your exit point? Where is your exit point? You then move to the upside. Here is your trend line. Hence, I said this is a build up. This trend line that you see here, it comes from the left-hand side. If the market reverses from the right-hand side, it is because of this trend line. You've been waiting for this trend line. This is 1 hour. When was this trend line tested? 31 July. When did the market come back? On the 1st of August. So it means you waited for the whole day, the market to move down, and then you got your entry. Let's do like this. You got your entry looking like this on 1 hour chart. The market went where? Went to the trend line. You got your entry, you exited on the trend line, you took another entry. Let's say you did not know that the market is now changing the direction. Ne? The market is going up now. You're going to get your entry from here to that trend line. You made that 1 point something. You went out. You get in from the trend line again. Remember, I showed you how to find your exit point. You get in again, you exit again. You are done with the trend line now. You look for another opportunity. Isn't it that here, there's no trend line right now? This is your exit point. This is where our new support is. Hence, I said everything that you see in the market, it's a build-up. So from here, you don't have any trend line. You are done. Let's say, for an example, your profit was roughly a 3 or 4 point something. What do? You wait for another trend line. You are done here. The fact that you know that the market is now moving to the upside, you look for another trend line. Here is your trend line. They are always there, just that you guys don't know how to approach them. Here is another one, very much visible. You take your trade. You just wait. Now, the fact that you know that the market will continue to the upside, you move to the left-hand side, or you can even go to 4-hour chart and pay attention to the left-hand side. This is 4-hour chart. Look at how the market went up. Look at how the market went up from your entry day. As the market is going up, you know that, okay, this is the break of structure that I think the market's gonna go to. That's where the market turned. That's the break of structure. Can you see that? And then as the market is going up to that break of structure of yours, you notice that, oh, the market went up, it came back down, and then it went up. Okay, that's my exit. I am done. Good. At my trend line, that's my second entry pushing the market down. What is hard here, guys? I think what is hard here is that you guys are looking for something perfect, of which is not something that you're gonna find. Your job is to pay attention to what the market presented to you and use that to your advantage. That's it. But if you're out there, you're looking for something that is 100%, you're not gonna find it. You will never find something that is 100% in the market. And believe me, this information is what will make you profitable. And again, the very same information that I share with you is not the only thing that will make you profitable in the market. This is not the only information that will make you profitable in the market. We have so many patterns that you can use in the market, but this is the simplest. I know that you guys find it hard to believe this information, but this is the simplest. But as simple as it is, so many people are taking losses, regardless of what I share here. So many people are taking losses. Why? It is because of you guys cannot wait. For an example of what I am saying or what I am talking about, people notice that, oh, flip, on the left-hand side, we had a very much visible trend line here. Those who got my ebook, they know these trend lines. Here is the trend line. And if people believe that these trend lines are not working and they are not supposed to be working, I always say, pay attention to the previous trend. We have nothing here. We have nothing here that caused the market to change the direction here. But if you move to the current trend as the market was going down, the trend line is the only reason why the market changed the direction. So if you learn to pay attention to everything into detail, that's when you'll understand, oh, okay, fine. I got the first time touch there. I got the second time touch there. That means the market will come back to this third touch. That's where I'm going to step in and buy. And then look at how the market went up. Now, again, check when the trend line was created. 7 July. When was the trend line tested? 17 July. People were not going to be able to wait for the market to go up and come back down to test the trend line. By the time market yakhe inyuka iya phezulu, omunye seblowile already. By the time ifika laphayana phezulu, omunye the market is going up, it's no longer coming back. Uyabhaya, yes. This is how they keep on manipulating those who don't have experience. I'll always say this. People will jump in here thinking that the market is going down. It's a sell. They jump in, the market goes up. They be like, oh, flip, it's a buy. They start buying, the market goes down. After seeing this huge candlestick, they be like, oh, flip, I was not supposed to buy. It's a sell. They start selling, the market goes up. By the time the market comes back to your trend line, what do you have in your account? You have already blown your account. You will just watch the market going up to your direction. And that's painful. Because you knew that you were supposed to wait. You knew very well that you're supposed to wait for the market to come back to your trend line so that you can buy. But because of you kept on creating opportunities over and over and over and over up until you had no opportunity to take. Those who trade continuation pattern in the market, I've shared what continuation pattern is, guys. Senyayazi by now. If you don't know what a continuation pattern is, leave a comment. Let me know what you think about a continuation pattern. Or if you don't know what it is, let me know in the comment section. Maybe I can make a video going back to explain what a continuation pattern is. Look at this. Look at this. I'm on 4-hour chart. Check when the continuation pattern was created. 18 July around 5 a.m. When was the continuation pattern tested? 20 July. The market continued to the upside. It is straight to the point. A continuation pattern, it is a pattern that shows that the market is still going to that particular direction. We don't guess here. We buy based on what is presented to us. That's it. But if you are clever enough in the market, you'll find yourself maneuver very nice. When the market gives you whatever, you just jump. Check. sengikufundisile angithi now you understand what is happening. Awufani nalo ozothi ayazini I can see the market is going down. I-market ila ujumpa in wenzani uyasell expecting the market to come this far. I-market ila ubeka i-stop loss sakhe just up there. Uma eqeda ukusela i-market iba ready little bit. Uyajabula that the market is going down. Uma i-reverse the market is giving me a pullback nyana uyarelaxa angeke a-exit kulelo trade lelo. Market yenza whatever the next thing i-market ishaya i-stop loss sakhe iya kuphi iya phezulu. Uma ifika phezulu abona this candlestick uyaqala flip it's a pie uyangena uyabhaya laphayana expecting the market to continue to the upside. I-market itest i-trend line thina sithatha ama-entry we move with the direction of the trend line. Simple. Here is your trend line. This is your first time touch. This is your second time touch. The trend line was broken. They will come back and test the trend line. You move to the new direction. That's how you approach the market when you use trend lines. It is this simple, guys. But now you're out there, you don't want to wait. This is a waiting thing. You wait here, guys. Let's use another example so that you can see that if you can learn to wait, how far can you go? It doesn't matter what you are trading in the market. Né? You'd be trading support and resistance, your job is to wait. You'd be trading continuation pattern in the market, your job is to wait. You'd be trading support and resistance, your job is to whatever that you're going to be trading in the market, one common thing is waiting. One common thing is what? It is waiting. So look at this again. The market was going up. As the market was going up, they came back down. Why? What was the cause for the market to come back here? Let's erase everything again. Let's add the trend line here. Okay, they did not test this as a trend line, but I assume if we let's just go to daily, there might be a continuation pattern there. Let's go to daily. Instead, they created a continuation pattern as the market was coming back to test there. If we go to 2 hour, we're gonna find a break of structure. Let's use the break of structure on 2 hour chart. This is the break of structure that I am talking about. Use a line chart or flip. Here, this is how it looks like. This is the break of structure. On which time frame? On 2 hour chart. Let's go back to the candlesticks. This is the broken resistance. The market came back to test it. And then the market continued to the upside. Yonke into ozoyithola ku-market bazokupresentela yona, guys. And again, you're out there, you still feel like trend lines are trash. Okay, no problem. Look at how the market went down after testing that trend line. Look at how the market went down. This is 2 hour chart. How much were you going to make? How much were you going to make? I just want to hear from you. But no problem, guys. If you do have a question regarding what I was talking about, please feel free to leave a comment for me. And again, if you enjoy my content, please do not forget to like and subscribe. See you next time.